Arjuna Mahendran, the head of Asia Investment Strategy at HSBC Private Bank. Many thanks for joining us, Arjuna, today.
Good morning.
If I can talk to you first of all, we've had two guests this morning. One was bearish, one was bullish. Slightly bearish from Wells Fargo, talking about concerns about the US and how the Bush tax cuts will expire and the 14 trillion of debt. And then, of course, talking from Bank of Tokyo Mitsubishi, he says next year actually it's risk on. What are you saying to your clients?
Well, about the U.S., I think to use Churchill's famous adage, they do the right thing after they've exhausted all alternatives. So I think they'll probably do the right thing in the next couple of weeks. Congress should, come across with some sort of package which I think would extend those tax cuts. I'm still optimistic about that. And I reckon that, yes, we will have a fairly good January. But having said that, risk on is not going to last forever. It's probably just going to continue its pattern that we've seen for most of the last 2 years, which is, periods of risk on punctuated by risk off. So the trend, I think, could possibly be downwards. There's downside risk at all times. But having said that, the recovery in these risk-on phases could be quite spectacular.
With that in mind, do you believe the markets next year will also be held hostage, if you like, to politicians' indecision?
Absolutely. I think, the markets are really being ruled by political decisions right now, and that's the whole game that's going on, trying to anticipate how the politicians are going to react. So, taking a bet that the US politicians will come out with those tax breaks or the continuation of them is just one of those sort of ingredients that we are looking for. Over in Europe, it's much more murky. Clearly, the fact that the UK backed off from backing the fiscal compact is a negative. We'll have to see how the Europeans come up with a fiscal compact outside the rule books of the treaty, and that then could hopefully engender some sort of a euro-wide bond, which is really the eventual solution to this current problem we are seeing in Europe.
Your allocation, Arjuna, cash, metals 15%, fixed income 45%, equities 25%. Of all that, how have you allocated your funds? Have you any dramatic changes going into next year?
No dramatic changes. It's basically a hunt for yield. We are seeing fairly good yields both in the fixed income as well as in the equity space. But obviously we are heavier on fixed income because I think, there is generally a slowdown worldwide. I don't think GDP growth in the US or Europe is going to significantly increase to about 2.5%. And that's mainly because the debt levels are so high. All the historic studies seem to suggest that when debt to GDP exceeds 80%, you get slow growth. And in that context, I think, bonds are going to do better than equities in general. But having said that, if you play this risk-on, risk-off cycle, clearly there is money to be made in equities, particularly the ones that are fairly generous with dividends.
And overall, equities themselves, you've got a few metrics there. First of all, the obvious one, structural growth, balance sheet strength, earnings resilience, and I guess no debt at all. Those are the companies to invest in. And the yield, of course. Absolutely.
Yes, we want to see how resilient those dividends are, the generous payers of dividends. Can they continue paying those? But there are sort of silver lining across the global economy. If you look at the wireless space, smartphones seems to be surging ahead. So a lot of telcos, the likes of AT&T, Telstra, Vodafone, all paying nice big fat dividends. And it's sustainable because they're charging their customers for using their broadband services. And similarly, even the hardware manufacturers, you look at a company in Taiwan like TSMC, its stock has done remarkably well this year. So I think, there are pockets where there's a lot of value.
Arjuna Mahendran, have a very good Christmas. Thanks for joining us there. Arjuna Mahendran, the head of investment strategy at HSBC Private Bank.